silver has a very strong chance between now and year end of taking out the old dual highs at $50. I guess they're phantom highs anyway. They were hardly up there at all in terms of duration, and going into the $60, $70 range. And I'm not saying that's a top. I'm just saying that's the next pause point maybe. But I think that the important part is the surge. I think silver could basically double. That's what I'm saying over the next 6 months. Now gold will go up nicely too, but silver will outpace gold on a percent basis. So that personally, that's my focus.
Yeah, and you're still dealing with a pretty much a 100 to 1 gold to silver ratio or silver to gold ratio.
It's ridiculous, yeah. No, it's historically cheap, yeah. It's firming. Silver's firming versus gold. So, yeah, we're negative on the stock market. We're very positive on the monetary metals. We think in the next 5 to 6 months, you're going to see, for example, gold continue up, but silver explode.
It looks like it's already exploding today, and we're up to 36.50 today. It's up almost 50 cents.
Yeah, no, you're using the spot contract there, I think, or spot.
Yeah.
We use September silver right now, and September is trading at 36.70 something. But you'll see the explosion that occurred in April, and it blew through the two $35 highs that existed. Mm-hmm. One was in last October, and then there was a $35 high in March, those two peaks. Yeah, so double top. They tried to break down hard in early April, trying to act like they're the stock market, which they're not. Silver follows gold and always does. Exploded through those highs and has held its ground despite constant selling for the last 4 weeks or so. I think you touch 37 again and you're going to be gone. In other words, they're going to realize this isn't topping. This is just a pause. I think silver has a very strong chance between now and year end of taking out the old dual highs at $50. I guess they're phantom highs anyway. They were hardly up there at all in terms of duration, and going into the $60, $70 range. And I'm not saying that's a top. I'm just saying that's the next pause point maybe. But I think that the important part is the surge. I think silver could basically double. That's what I'm saying over the next 6 months. Now gold will go up nicely too, but silver will outpace gold on a percent basis. So that personally, that's my focus.
Yeah, and you're still dealing with a pretty much a 100 to 1 gold to silver ratio or silver to gold ratio.
It's ridiculous, yeah. No, it's historically cheap, yeah. It's firming. Silver's firming versus gold.
Yeah, this is silver relative to gold, so you can see the
long way back. These are very. In other words, if this were a price chart and you know it's not going to zero, what do you think about here? Are you bearish, or you look? Hey, maybe this is a bargain. Okay, it ain't going to go to zero. Okay, and I think that next upturn could easily take you up to there. You've got it expressed the way we do, to the 2% level easily. In fact, if you go back, you go back quite a ways here. The number of the past 50 years, going back to the mid 70s, where we get up there to 6.5%, silver has reached 2% in 21 of those 50 years. So it's almost routine to be at least 2%.
Right.
And we're right now 1.09, okay, or almost 1.1%. So it could double in relative performance just to get to the 2% level, which that's not even a big achievement.
And that's assuming gold stays constant.
Gold's going up during that time.
Mm-hmm.
It's just that silver's going to go up. Instead of being 1% of the price of gold, it'll go to 2%. Because whenever the spread goes up, by the way, the metals both go up. It's never a case that silver doesn't go down and gold goes down more. It's always the case that when this spread rises, silver is going up more than gold. Deficit spending and so forth that is ongoing. There's guys like him that don't quite latch on to the Trump movement. So I could easily see, especially if certain things happen that aren't supposed to happen, like commodity inflation comes back. Well, why is that happening? Trump, et cetera, that you could have fragmentation there. So maybe the two-party system will evolve into something else, like a multi-party system they have in a lot of countries, very fragmented. All kinds of changes like that could occur exterior to the markets and are likely to occur, because I think these market events are going to be very impactful to the average guy,
Yeah, especially in regards to some of the younger demographics. I mean, I'm probably younger than a lot of people that watch my content. I can tell you a lot of my friends do not associate with either Democrats or Republicans. They're kind of they're both antiquated parties. So
a lot of things like that up in the air. The 52 card pickup, I think, is coming, not just in markets, but By the way, there's one market we haven't mentioned. I want to mention dollar index. Dollar index has been dull, dead quiet between 2023, 2024, and even into early part of this year, where you could, if you got a chart of the dollar index, you had that run up into 2015, and then you dropped hard into 2023 through 2024, and you stayed in a narrow little range. It was about 8% wide for 2 years. When they tried to break out of it, we put out a report saying, don't trust the rally. It's a breakout on the price chart, but it's baloney. It won't sustain. But it didn't. In March, the first hard month off that high, we went major bearish because you've got a trend line here on price, but we had one on momentum that broke way up there at 104 level.
Okay.
That would be in March. Okay. We dropped down to 124 close was that month. And then you dropped hard into April. By the way, there's one market we haven't mentioned. I want to mention dollar index. Dollar index has been dull, dead quiet between 2023, 2024, and even into early part of this year. April, May, June is now blown through your price trend line, but it's also blown out another annual momentum structure at that point. We're maximally bearish on the dollar index. But what's happened here is here's a major factor in markets, the Forex exchange rates. This is primarily the dollar index is primarily the euro and the yen. Combined, they constitute 70% of the dollar index. Okay. But there's nothing been going on between 23 and 24 in terms of any volatility. So it was not a wave maker. It didn't have impact in other markets. Now, I understand that foreign investment in the U.S. stock market over the last few years has grown to levels it's never been before, very high. But they are affected by not just the price of the S&P, but by, they took the euro and the yen and bought dollars and bought our stocks. Okay, so they're dollar vulnerable. So if the dollar suddenly drops from where we said sell it at 104 in March, 104, it's now down to 96. That's starting to have an impact on somebody who holds assets in the U.S. Forget whether that asset went up or down, but suddenly you've chopped that much off the conversion value of that asset.
Right.
So that could help weaken the stock market, and also maybe people who own long U.S. government debt market. They're being impacted by this. While the bonds are sideways at a strangle level, in conversion terms to a yen or to a euro, you're getting hurt.
Isn't this jet fuel for a lot of commodity companies though? Because a lot of commodity companies are based out of Canada, Australia, foreign currencies.
I think it will help assist gold. It's not a primary driver for gold. In the long term, it is. Ultimately, the degradation of money is always an underlying factor for gold prices. In the short term, it's suddenly taken a sharp drop. And if it starts to drop more precipitously, that will turn heads and that will help fuel gold more. But also the commodity complex looks ripe to do just the opposite of what you're seeing here. You're getting a major breakdown in the dollar after a couple of years of sideways. Well, what did Bloomberg do? Went sideways between 23 and 2024, bottoming. This guy went sideways, topping between those same years. And now suddenly he's broken out to the downside. Bloomberg is 3.5 points away from breaking out to the upside on our long-term metrics, annual momentum. Right now it's around 103. You get to 106.50 on a monthly close and you're out of here. So it's an inversion of the commodity complex. You're right. So I think it will be a further fuel for the commodity markets and the stocks related to them. Yeah.